monthly candle close, guys. Okay. January is not over yet, but when you're living it and the candle is not going in your direction, and then you have it's pulling back harder than you think, you're above daily breakout line, so you had a breakdown line, and now the daily's back above it. You had a monthly defined breakdown line, and the weekly is above it. Well, what's important is the monthly price action, the monthly close. Is it back above that monthly breakdown line? This has been the line in the sand for the SPX 2630. And look at that. During the month, you had all that price action above. Zoom in on the weekly. Oh, last week closed above in the Ichimoku cloud, hitting that Ichimoku cloud. Below 30 average. Daily. Daily, same thing. You had a close here. You had a second close here above. Now you're going back down below. Could still go back up. Could still go below. But you got to remember that this is the purpose of monthly closes on the bodies. So those red candles going down. And if you have a gap down, that's the bottom, the open of that green candle. That's your support. Everything under is potential. It's noise. It's potential whipsaws. It's until you have a monthly candle close like we have in December, confirming that you have that breakdown. That could be noise. And since we closed below, when a confirmed downtrend, 12-month average is going downwards. The price action is below it. 12-month average is declining. And here you had some price action above. Then after that, now the price action is going back down below. So all that, the flexibility of a support line, it's not hard lined, but eventually the market decides, oh, okay, that's too high. This is what the close, this is where we want the price action to be. So you gotta wait. Don't get trapped. That's probably why I don't try playing uptrend if the higher monthly trend is going downwards. If that monthly average is going downwards, I'll stay on the sidelines while the pullback is happening. And when it starts going back down, I have this monthly defined support now turn resistance. When it starts turning around on the daily, start get red candles on the daily. I start getting red candles on the weekly. That's when I'll enter. I'll probably get closer to 30 average, protected by that breakdown line, and that's how I enter on the pullback. It's just part of Stan's premise. Don't go against a higher trend. It could work for a little while, but just need that energy from the higher trend, that the macro technicals or whatever's driving this, just picking up for some reason and saying, okay, time to go to resume that downtrend. Remember, it doesn't go in a straight line. And then you just get squished. So you got to be really careful, really, maybe some really highly skilled traders are able to pull it off, playing an uptrend on a smaller time frame within a higher trend's downtrend. But I do not do it. I just wait, and I feel comfort knowing that I have the higher trend in my favor. Just like in an uptrend, I wonder if people playing uptrends on the higher trend, and then when there's pullbacks, do they short it going downwards? So let's say you have an uptrend, the higher trend, and then on the weekly or daily, they have a downtrend. Are they going to fade that move, sell it, short it? And it's kind of weird. I don't think people do that. They'll try to play always up within a higher trend's downtrend, and they won't play down when they're going uptrend. There's like, I don't know, maybe psychology of it. Maybe shorting's frowned upon. Not quite sure what's the deal with that. But at the end of the day, the monthly trend is the one to respect, and I decide not to go against it. Okay. So that's for the SPX. Could look at a few markets. Oh, let's blitz, man. We'll just do the monthlies. UK had that wick all the way up here. Price action going back down. 12-month average going downwards. China, same thing. price action came back down to that monthly defined breakdown line. 12-month average closing in, great risk reward entry, and the price action is starting to suck back down. Month is not over, it could close above. You still have to wait, but this is just to demonstrate. Look at all that price action above, and I don't know within how many days decide to suck back in. Check it out. 1-2 days. See it for 4 or 5 days was above, and then the 4th day he came back down. There's my monthly chart. So still in the downtrend. Probably good risk to reward entry right here. Hong Kong, ooh, okay, looking better. Closing in on that breakdown line. 12-month average catching up. The longer you stay, the more it's skewing downwards, but you're getting good risk to reward entry. And that wick is starting to grow more and more, and you're going to have probably a sideways pattern right there. NASDAQ, ooh, the NASDAQ. So the NASDAQ is... Here was the neckline. You had some strong action on that pullback above that neckline. He's trying to get good risk reward entries here. And after that, now it's sinking down. Let's see if it could close the month below that neckline to confirm that it held, that it was important for the market to not have a close above it. And then you could resume that downtrend going downwards, guys, to the next important support right down here. Japan, same thing, long wick. That pullback looked impressive, but it's getting sold into before the end of the month. So at the end of the day, you're just going to have a small body here. It's a small sideways move and maybe a continuation down. I don't know if it's going to gobble up all that green, but the rally is not as impressive when you look on the monthly. When you remove that noise, this was probably the closest you could have got to a re-entry on that pullback. SPX, we just looked at it. Same thing. This is as close as you got. That sweet spot. Netherlands, look at that. Was above that original breakdown line a few times. Oh, down. So it's already deepening. Bigger pattern. Top pattern. Creating a bigger pattern. And that rally is getting sold into, hitting that monthly defined. I keep repeating it, but it saved me a lot and of whipsaws. You could back test it, you could look at other charts, and you could have said, man, why that move on the daily work against me? And then when you draw on the closes for that support and on the close on the green candles for that resistance, you can see, I was hitting monthly defined support. And it just, by the end of the month, it rejected me. Dow Jones, same thing. Very, very close. Look at that. That could have been a great risk reward entry. And if it closes the month below that breakdown line, then there'll just be a big wick. And people will be looking at those charts in the future and they'll be saying, oh, look, that was just noise. And it's going to look great. Just like here, somebody could have panicked. Oh, look, I have a weekly close or below my horizontal breakout line on that uptrend. But if they would have waited for the end of the month, they would have said, okay, my candle's good. I'm still in the uptrend. That noise, that volatility from the daily, the weekly, all erased within the wicks. I love monthly charts. Euro, I think that's a stocks 50. Same thing, downtrend, hard pullback, but after that, you see that body shrinking. As a seller, the buyers came in here because they decided it was too low. The sellers are coming in here now saying that's too high, keeping the price, those candles lower and lower, dragging that 12-month average going downwards. I'm not quite sure if we're ever going to go test this anytime soon. Ooh, all right, the Russell. The Russell did a pretty good move back. It's the one that got the hit most in December. Had a strong rally back up. Didn't go over its break line as the NASDAQ did, as the Dow Jones did, and as the SPX did. So that's probably the best you could have got as a risk-reward entry. So that one is below. It's probably going to close a month below. Just got to wait and see, guys. But this is downtrend. Remember, the longer you're below, the more that 12-month average is declining. France 40, I think that's the CAC. Same thing here. Try to pull back up. Then there's not enough strength. Relatively strength speaking, the Dow Jones probably the best one. That pulled back the hardest. NASDAQ also. Remember, close to that, their average, their declining moving average. And the CAC can't do better than that, guys. Very hard to enter here. High risk, low reward environment because you don't have that 12-month moving average close to you for a bounce. You don't have that monthly defined breakdown line to help you. You're just going to have to wait to see where it gets some support and where that's going, guys. Ooh. When you zoom out, man, wow, a lot of air. Okay, I think this is a DAX. Germany, same thing. Rally look impressive. Getting sold into right now. Still a week left in January. So you never know. This could crazy close up here. But you're still in a downtrend. 12-month moving average going downwards. You're not pulling back close enough. And see, the 12-month average is already now below that top formation. I think that's the first one that did that. And I had this creating maybe a bigger pattern like that. And after that, I had my crazy target all the way down here to these 2011 lows for the DAX. Okay. Oh, Australia. Yeah, Australia had a strong pullback above monthly defined necklines, breakdown lines right here. Closing in really close to that 12-month moving average. Still going downwards. Close a month below that monthly defined breakdown line. Now, really reaffirm that stage 4 decline. Remove any strength, and then we just end up with big wick and a consolidation pattern off that bigger, lower support line right here. That would create a bigger pattern, giving me a bigger measure move. All the way down here, guys, to these 2016 levels right there. Taiwan, look at that. Pullback, I don't get it. Not doing very good. Try to pull back up, but not really challenging. Soon the 12-month average will be below that top formation. Sideways move here. Low, high risk environment in case of a pullback close to that 12-month moving average, close to that monthly defined breakdown line. But let's see what happens here, guys. See, it's hit during the month. This consolidation pattern here. Even just a little lower right here, I think. 4-month sideways move, breakout. That's resistance, now turn support. So let's see how it consolidates here. And what usually happens is create a bigger pattern for a bigger measure move. But right now, still severely in the stage 4 decline. And India, in the Nifty. So that's probably the strongest one, above its 12-month moving average, but not quite. Always giving signs that it wants to continue its stage 2 on the monthly chart. But look, the moving average, it's crazy. Price action above. Moving average is actually declining right now. So I think there was a lot of price action below maybe that 12-month moving average. Why is it declining? Oh, 10.827 and 10.8. So the 12-month average is starting to decline. I'd love to get a close below that 12-month moving average as a first step, and then after that, a close below 10.350, and ideally a close below this one here, 10.180, and then after that, that'd be all that price action below 12-month moving average, make it skewed downwards, confirming that that's a top, and it would join the rest of the indices around the planet saying, hey, something is up and we're in a stage 4 everywhere. And that's one of the things I noticed in 2008. There's a synergy eventually, and before I say like there's a bottom, what I'm waiting for in the stage 4 is they're all breaking down at different moments. Like the European markets had started breaking down before, even the Asian markets before the Americans. And when there's going to be synergy, when the Americans start doing a big leg down, I think the Europeans and the Asian markets are waiting a little bit on the sidelines, and they'll be doing that leg down at the same time, just like in October of 2008. Different markets, different sectors had rolled over at different times, but when that last sector that was holding true failed, they all held together a good percentage point. So that's what I'm waiting for. Monthly candle chart, guys. Look at those wicks. Don't get trapped. I know it's fun trying to play smaller time frames, but at least try to play them when you know you have the higher trend in your favor, just to increase those chances. Stan did it that way. A bunch of other guys did it that way. Traders with tons of experience, and I'm not going to go against them, especially after my experiences and observations. The higher trend is your friend. All right, guys. Subscribe if you like this.